All right, let's take a look at another exercise. We've got one titled Financial Statement Relations to Compute Dividends. Okay, so this is actually the math that we're going to be doing on this question is pretty simple, but we have to know what to do, and that's where it gets a little bit tricky. And again, I've said this before. Chapter 1 of a lot of these textbooks, they throw a lot of stuff at us. Okay, and so this is this is not a piece of cake here, but we do need to understand some things about the accounting cycle and how all this works. So I've, in the interest of time, I've made some diagrams here. This question essentially deals with retained earnings. And retained earnings is a balance sheet account. But how do we get there? Okay, how do we get there? So what we understand is that we start on the income statement, okay? And hopefully we have positive net income, meaning we made money, okay? And that net income will flow eventually over to the balance sheet. However, we've got this intermediate step here. Oftentimes what happens is companies will pay out dividends, and dividends are simply the owner's share of profits. So, for example, if you paid out all of your dividends, if you own 10% of the company and they made $100,000 and they paid out 100% of their earnings to owners, if you own 10%, you'd get $10,000. Now, if they paid out 70% of their earnings by way of dividends and you own 10%, well, you'd get $7,000, 70% of the $10,000 that you were entitled to. The rest of that is said to be retained by the business to help grow the company and so forth. So if we look right here, we've got this Colgate-Palmolive company, and for last year, they had retained earnings of $19,922, and that's in millions. This year, they have retained earnings of $2,531. Now, we know already, hopefully, or we're gonna learn this eventually, that they made money. Okay, this retained earnings can only go up if we're making a profit. That's the only way that can happen. But the question is, how much profit? We can't simply subtract last year's retained earnings from this year's. Now that might work. But that would that's not what's going to take place here. So we need a little bit more information. Okay? Let's jump down here to the question. It says, assume that the only changes affecting retained earnings, and there are changes as we've shown you, were net income and dividends. The question then is, what amount of dividends did Colgate-Palmolive pay to its shareholders? Okay, that's the question. All right. We come up here, it says during 2017, Colgate-Palmolive reported net income of $2,024, and that is again stated in millions. Okay, but we can kind of just look right here and we can say, well, you know what? This doesn't look like it went up by 2024. It looks like it went up by about 600 or so, right? So the way we would calculate this is we would start right here with last year's retained earnings. And in fact, if we were looking at something called the Statement of Retained Earnings, okay, I'm going to abbreviate, we would say beginning retained earnings. That's how we start. We're $19,992. Then we're going to add, whoops, let's see here. I'm going to scratch this out. I didn't mean to write that up so high. Let's see, and I think I had the wrong number. What does it say? It's 19,922, not 92. Then we're going to add to that net income, and they give us net income right here. It's 2024. Okay? And if we were to add that up, we'll use the calculator to do that. We would have 19,922 plus 2024. Okay? And that gives us 21,946. But that's not what retained earnings are. So what we're saying here is that the amount that was paid out in dividends is the difference between this 21,946 and this 2531. So what we would normally do on a statement of retained earnings is we would have the amount of dividends provided and we would subtract that number from the 21,946. But since we're having to solve for dividend, we're actually going to do this a little bit differently. And what we're going to do is we're going to subtract out, and this is not how we would put together a statement of retained earnings, but it will work for our purposes. We're going to subtract out the ending retained earnings. Yeah, let's see here now. What did I do? Let's clear that out. 21,9, I think I was right, but 21,946 minus 20,531 gives us 14,15. Okay? So what we're saying here is that the company made $2,024,000. Okay? They paid out $1,415 million in dividends, and then the rest went over to the balance sheet to retained earnings. And just by math, let's see, that's 531 plus 78, looks like about 609 went over to the balance sheet. So our answer, as far as what was paid out in dividends, is 1415. Okay, and I'm going to leave that on the calculator because the next part of the question says this dividend amount constituted what percent of its net income. Well, all we have to do is just take this 1415 that was paid out, and that's going to be our numerator, and then divide by net income of 2024. And let's see here. Let's see, what do they say? They say round your answer to one decimal place, so 69.9. 69.9%. One thing, just for a little bit further explanation, if the question had been how much of the earnings were retained, we would just take the 2024 earnings and subtract out the amount that was not retained, the amount that was paid out in dividends. And again, I kind of did that in my head, but the difference here is 609. So 2024 net income paid out 1415 in dividends, and then so the increase here is 609 from 19,922 to 20,531, because it says that there were no other changes, and I'm not sure what those changes would be, but we have essentially verified that. All right, so I'm going to move this right here just for a moment. So again, net income comes from the income statement. It goes over into a statement of retained earnings. So we take beginning, the way we'd normally do this is we're going to take beginning retained earnings, add net income. We would subtract out the dividends paid, and we would actually come up with this 2531. We did it differently because we were having to figure out what the dividends paid were. They weren't provided to us. Okay, so we had to adjust our thinking a little bit. All right, well, that'll be it for this video.